Scott Gecas joins us. He is at the edge of the trading floor in Chicago. He's with Walsh Trading. And Scott, your perspective there from the trading floor, what are the traders talking about here on the grain trade today?
Yeah, with the report yesterday, it pretty much came in line as expected. No really big surprises. So the one market that stood out to us was the corn market. It was trading a little bit lower right before the news. The news hit, and then we ended up, regaining all those losses and trading a little bit on the plus side. That was more or less due to short covering. You're seeing a little bit more short covering coming into today. The volatility is starting to collapse a little bit after the report, as expected. That's usually what happens, but all in all, it's pretty quiet. It's pretty sideways. Really, not that big of a heavy volume day.
So it's like the trade almost has to take a defibrillator to the corn and soybean market to get it going here. It's just so flat here the last couple of weeks at least. From a time frame, a seasonal perspective here, when do you think this will finally start to budge one way or the other here?
Well, I think right now the main focus is going to be on what's going to happen with the weather. How wet is it going to stay? Is it going to start to dry up? And then you also have the trade war talks. I think the trade war talks, as soon as it's done, it's going to help the markets in a very big way. Not that it's going to have a positive effect or a negative effect, but just if the deal gets done or doesn't get done, then you get that completely out of the question, and then we can start focus on the fundamentals as well as the technicals, and then start moving forward at a normal level rather than just a headline risk.
All right, we'll come back in a moment. We'll examine our livestock markets as well. We're talking with Scott Gecas, and we'll be back in just a moment. Scott Gecas rejoins us. He's with Walsh Trading in Chicago. So, first of all, that wild action in the hogs, nothing new for the past week and a half anyway.
Yeah, for sure. The one thing that has to be noted with the lean hog market is, because of the extended move, it's getting a lot of press. You're starting to see people that normally trade the hog market, now because of the expanded moves left and right, that people that don't normally trade it are starting to trade it. So you're seeing a little bit more extended volume with all of the African swine fever rumors and cases expected to reach, exorbitant amounts. I mean, the 120 calls today in the front month, May, they traded over 460 times. I mean, that's a long way away from where we're at. But right now, if you look at the volatility is elevated. The June options are pricing in about a $13 move. And when you have the limits around $3 even extended, that's outside of those limits. So that's why volatility is really high right now. But if you look at calls versus puts, they're pretty much flat. It's just the volatility is high across the board.
So if I'm correct, and if I remember correctly, when you have expanded limits, that also means all the margin requirements go up by 50% as well, don't they?
That is correct, yes.
All right, so that has a big impact on the complete makeup of the players in the market. It does force a few people out because it costs a lot more to play or stay in the game, as they say. So just wanted to point that out. Scott, good to have you with us. Thank you for everything. I appreciate that very much. Scott Gecas happens to be with Walsh Trading. He's located right there in Chicago. So, boy, there is a lot of money at risk in Chicago.
Yes, there is. Thank you very much for staying on top of it. Sure appreciate it.